Let's figure out how GST actually works for the business. And probably the easiest way to do that to start is not pretend we're the business, let's pretend we're the consumer, because that's what all your life experience is at this point. So let's take an example. You go to 7-Eleven, here's you. Here's 7-Eleven or the business, and you purchase a Coke for $3. So there's your $3, there's the Coca-Cola. However, when you go to the register, you have to pay $3.30. And we looked at a previous video, that's because a Coca-Cola would have 10% GST on it, which would be the 30 cents. So the 30 cents represents the GST, which is 10% of the sale price. You do your swap, you walk away with the Coca-Cola, and 7-Eleven has $3.30. So that is like an everyday experience for most of us. We buy stuff all the time. What we want to do now is go, well, what about if I'm 7-Eleven? What's this $3.30 all about? And so really when we think about it, all the money, the revenue that 7-Eleven has got is really two things. So in this case, there's $3, which is revenue. This is the amount they earned. They get to keep that. That's theirs to keep. And the 30 cents is a liability because GST is a liability. It's an obligation. When you think about it, 7-Eleven can't keep this 30 cents. They have to pay it to the government. They have an obligation which meets the definition of a liability, which we looked at in a previous video. So really, that $3.30 for 7-Eleven isn't one thing. It's two things. There's $3 of revenue and 30 cents a liability. So now the question becomes, well, this seems kind of complicated because that 30 cents of GST has to go to the government. So why can't you just do this? Why don't you just buy your Coca-Cola for your $3? And then why don't you just give the 30 cents straight to the government in Canberra? That would be really direct. That would be simple. However, it would be impossible to enforce. How would you even send it? How do you send it to the government? And there's millions of transactions every day, so that it clearly wouldn't work. So the way the government designed the system is they said, we're going to have to get the person paying the tax, which is you, you're going to have to give your 30 cents to the business. So 7-Eleven's going to hold on to it. And then every 90 days, in reality, we don't need to worry about the 90 days in our course, but every 90 days, 7-Eleven has to give your GST of 30 cents plus all the other GST it collected to the government. And that's why it's a liability. So the way the GST system was designed to work, which is not a topic for us, it might just help you understand it, is there's consumers, which is you and us when we buy stuff. Okay, you pay your 10% GST on all your purchases, but you don't give it to the government. You give it to the business, and the business collects it. It not only collects your GST, it collects 10% of GST on all of its sales from all of its customers. And every 90 days, it will do what's called a BAS statement, business activity statement, and it will give all that GST to the government. And that's how the government raises taxes from GST. So what we need to deal with is, well, what does it look like for a business when we've got this GST, but we have to give it to the government? So what we say is, well, it's kind of complicated, okay? But there's a video where we probably want to pause and rewind and rewatch and so on. But let's take 7-Eleven. We're going to put all our GST in a big tank or a big tub here, okay? So every time we make a sale, it's really collecting 10% GST on behalf of the government. It's not for 7-Eleven to keep. So let's say we added up all the sales for one 7-Eleven, and all the sales of Coca-Cola came to $300,000. They sold $100,000 of sandwiches and $200,000 of coffee. Well, the GST on those would go on this big tub. Okay, so there'd be $30,000 of GST that 7-Eleven's collected. That goes into the tub to give to the government. And there's $10,000 of GST on the sandwiches. That goes into the tub. So now the tub has $40,000 in it. And there's $20,000 of coffees. So now that tub has $60,000 in it. So I guess what we could say is this is a liability, this tub, because the 7-Eleven is obligated to give it to the government. It meets the definition of a liability that we did in Chapter 1, which is this. There's a present obligation. What is that obligation? 7-Eleven is obligated to give the government $60,000 of GST. The second part of a liability is there's got to be a transfer of economic resources or benefits in the future, and that will be 7-Eleven gives the government $60,000 of cash. And lastly, it arose from a past event, all these transactions here that had GST on them. So 7-Eleven now owes the government $60,000, but the problem there is that doesn't really seem fair, because before 7-Eleven could sort of buy and sell all these products, they had to incur some expenses. So that means they would have paid GST on the things they bought. So what happens is the business gets to deduct those from the amount it owes. So here, the tub has $60,000 of liabilities in it, but this 7-Eleven, its rent was $100,000. Its inventory cost $300,000 to buy, and all the phone and internet expenses came to $100,000. So it would have paid GST on all of these. So what's going to happen is there's going to be 10% GST on the rent. That's 10 grand. That comes out. So just to go back, they owed 60,000, but they get to take out the $10,000 they paid in GST on the rent. They get to take out the $30,000 of GST on the inventory, and they get to take out the $10,000 on the phone and the internet. So when you think about it, this business really only owes the government $10,000. And what we're going to look at a different video called a GST clearing account. All that really happened was we kind of offset what we owed, and now we only owe the government $10,000. So the final GST liability for 7-Eleven, it must pay the government $10,000. So if we could just summarize, there's going to be a video we're going to have to come back to throughout the year again and again when we get confused with GST, because it will happen because it is confusing. We could summarize it as this and say, how does GST work? Well, we always assume it's a big tub, and that tub is a liability. And then what happens is we make sales of stuff like Coca-Cola, sandwiches, coffees, and we put the GST in that tub. So when we receive, as a business, when we receive GST or charge GST to and from customers, it goes in the tub. So the liability increases when we receive or charge GST. Now, we get to offset that with all the GST we've already paid or been charged by our suppliers. So we've got our rent, our inventory, our phone, we get to take that out, and that goes down. That would make the liability decrease. So I guess what we're saying is receiving and charging GST means the liability goes up. Pay it or get charged GST by suppliers, the liability goes down. What we need to do now is turn that into debits and credits and ledgers, and we're going to do that in the next video, and we'll learn the rules.